top of the morning to you and a warm welcome to Business Focus on Politics and Business TV. My name is Maria Adu Zakari. According to data from the FMDQ Securities Exchange, the Naira has now lost about 38.91% of its value since October 3rd, when it closed trading at 745 Naira per dollar on the IA window. This follows announcement of the exchange rate unification policy of the CBN in June 2023. The Naira's value declined from 471 Naira per dollar to about 700 Naira per dollar at the official market. The local currency hit a historical low on Friday, December the 8th, 2023, closing at 1,099 Naira per dollar in the official market. This marks the first time the Naira crossed the 1,000 Naira per dollar threshold, signifying a significant depreciation and rising concerns about its impact on the economy. The exchange rate also fell to 1,043 Naira on Thursday, December 28th, for the second time since reunification. It further tumbled to 1,035 Naira on Wednesday, January 3rd, 2024. Following these prominent fluctuations, manufacturers and other members of the organized private sector said the fallen Naira value at the official and parallel markets was having a severe negative impact on their bottom lines. The Manufacturers Association of Nigeria, Lagos Chamber of Commerce and Industry, as well as the Nigerian Association of Small-Scale Industrialists, said their members were already scaling down operations over the development, a situation that might lead to the sacking of more workers. The Naira began 2024 at 988 Naira per dollar, an 8.97% decline from the 907 Naira per dollar it closed trading on the last day of 2023 on the official window. Towards the end of 2023, the Minister of Finance and Coordinating Minister of the Economy, Wale Edun, announced receiving a $2.25 billion foreign exchange support facility from the African Import-Export Bank. According to the minister, the first tranche of its $3.3 billion facility from the bank is aimed at resolving FX shortages in the economy. In August, the Nigerian National Petroleum Company Limited secured a $3 billion emergency crude oil repayment loan from the African Export-Import Bank to support the federal government's effort to stabilize the foreign exchange rate. The Naira has yet to respond positively to this latest injections of liquidity to the dismay of many. Today on Business Focus, we'll be looking at the FX shortage and its impact on our economy. Let's take a look at the commodity and currency markets. We'll be right back. Going to look at the equity markets, and we're starting with the highest trades. Topping the list for highest trades, we have Transco with 96 trades at the volume of 2,618,000 at the value of 36,539. Second on that list is UBA with 61 trades and at the volume of 3,614 at the value of 107,785. We have MTN with 59 trades at the volume of 260,938 at the value of 74,321. We'll take a look at the top gainers as of close of market yesterday. Topping that list, we have J Burge, that's Julius Berger, at 10% positive. We have Qtix at positive 10% and Jaiz Bank also at positive 10%. Bottom losers as of close of market yesterday, we have Dar Communications at negative 9.30%. We have Etana at negative 0.79%. We also have CWG at negative 7.05%. Let's take a look at the commodity top performers, and these are the latest figures. We have sugar at positive 3.18%. We have nickel at positive 2.37%. We have oats at positive 1.80%. We'll take a look at some other commodities, and these are also the latest figures. We have precious metals topping that list. We have gold at positive 0.24%. We have palladium at negative 0.17%. We have platinum at negative 0.09% and silver also at positive 0.12%. We have energy now. Energy, this also are the latest figures unless stated otherwise. Topping that list, we have natural gas, that's Henry Hub at positive 0.42%. We have ethanol at 0.05%. We have heating oil at 0.00%. Let's take a look at another commodity. Let's take a look, and these are the latest numbers unless written otherwise. Aluminium tops that list at negative 1.69%. We have lead at positive 6.41%. We also have iron ore at negative 0.41%. Let's take a look at the last commodity. We have agriculture topping that list. We have cotton at positive 0.54%. We have oats at positive 1.80%. We have lumber at negative 0.09%. At the currency market, the Naira further gained against the dollar on Monday, 8th December 2024 at the official market, marking the third gain in this new year. The currency appreciated 1.45% to close at 856 Naira per dollar at the close of business, according to reports from NAFEN, where Forex is officially traded. At the parallel market, where Forex is sold unofficially, the Naira appreciated also, where it exchanged at the rate of 1,245 Naira per dollar. That represents a 0.80% increase. We'll come back for the interview segment. Don't go nowhere.
Hello there. Worried about complexities and dynamics of business in Nigeria? On Business Focus, we bring you insight from the forefront of industry innovation, business news, latest figures from the stock market with in-depth analysis and the market survey. Let's journey through the ever-evolving world of business and economics, where we decode the latest market moves and provide you with the knowledge to navigate the intricate web of business challenges. This is Business Focus. Hello there.
Welcome back from that break. We are on Business Focus, and we are here to discuss the Forex strategy and its impact on the economy. And with me is a fellow of the Accounting and Taxation Institute by name Mr. Wale Joshua. Good morning, sir, and welcome to Business Focus.
Yeah, welcome. Thank you. Good morning.
Good morning, sir. Yeah. So we're going to start directly. So what exactly is your assessment of our current situation? That's our foreign market. What's your assessment of that?
Well, the Forex market has been a little challenging in the last 12 months, even before the last 12 months. Before the APC government took over, we were trading Naira to the global currency at a lesser rate. After the taking over, we were promised that there will be economic diversification, which should have been a kind of a way out. But moving forward, we found ourselves at Naira to dollar exchange rate of 1 1,000 1,099 naira to a dollar,
Okay.
at the parallel markets for now, as of now.
Sure.
So this should have been an headache to any government in power, and should have been thinking about a way out of this challenge. The challenge is not only as it is on the surface value,
Okay.
it has its own impact on the economy. The impact on the economy is what we see, where we have interest rates and the gains on foreign currency being too wide. It gives room for speculation, okay, and it gives room for naira hoarding, so foreign currency hoarding. Apart from that, we have the cost of production. The high cost of production will always be experienced, because most Nigerian companies, most medium and big companies in Nigeria, they rely on imported material. They rely on imported machineries. So if they do this, there is a kind of pressure on the foreign exchange demand. So demand between the gap between the supplies and the demand for foreign currency, it's very, very wide. So that's why we need many interventions, like the CBN intervention, like the foreign the remittances, the remittances from our diaspora remittances. Then we have the production remittances. Then we have the crude, the crude production. That's why we cannot joke with our crude production at this current moment. Sure. Apart from that, we need to increase the supplies of crude, the extraction and the sales of crude. We need to get people to buy our crude, and we need to ensure that there is a stable production line. Apart from that, we may need to look into diversification. Okay. Where are we diversifying to? Just of recent, we saw our grain markets taking a kind of lead. The rice production has increased, the maize production has increased, but the absence of government intervention between the point of production and the point of sales has created a kind of gap. A gap in the sense that people came in with their dollars, they exchanged it to naira, having a huge amount of money to transact in the grain business. So after transacting in grain business, they export it at that cheaper rate to go and sell at a higher rate. Okay. So how will Nigeria gain from this particular practice? Okay. So there is a need for government to intervene in price regulation and export price determination.
Okay. So now we're going back to our naira. What does it mean for a currency to lose about 38.1991% of its value? What does it mean?
Well, the only good news from that is when you are borrowing in naira, when you are borrowing to finance a dollarized project. When you are borrowing in naira to finance a dollarized project, that's the only good news about that. Except for that, there are a lot of bad omen from that. Except we are going to look inwards. We are going to be forced to look inwards, because we are importing most of our material, production material. We are importing most of our machinery. In fact, we are importing most of our brains in the name of expatriates. Mm-hmm. So if we are importing all this, there is no way we won't be paying more, because we have to source for more naira to pay for the costs of the foreign exchange costs of that commodity. Apart from that, the bad news is that it gives room for a lot of speculation. Because if I can borrow a loan as of January, if I can borrow a loan of, let's say, 10 million naira, tell my creditors to wait till December, and I can buy foreign exchange, keep it in my safe, keep it safely.
Get a foreign currency.
Yes, get foreign currency, keep it safe in my till. Then by that December, when I'm to pay back my credit providers, I will just convert the foreign currency, convert it to a rate at the rate prevailing at that market price. Then pay my creditors. Then I smile back to my bank with the gaps between the interest rates and the gains on the forex. Apart from that, if I have a project, if I'm looking at a project that will come up in the next 2 years, and it's a project that will happen in, let's say, Europe, America, or Asia, it's better I keep my fund in foreign currency, because I am not too sure of what will happen to our dear naira between this period and the next 2 years. We are hoping for the best, but there are other things that we look forward to the government to provide, like the infrastructure, like a lot of other things that will bring income to Nigeria, to Nigeria, rather than bringing expenses to our dear nation as a whole. So it's not a good news.
Okay. So now talking about what you just explained, that you could borrow 10 million and then when returning after a whole year, it would sort of double or triple, if not go 4 times. How would that translate to our economy? That's to an individual. How would that translate on the economy?
It's giving room for speculations.
Okay.
Speculation, and speculation, because it's a risk. If I told you that I can borrow by January, pay back in December, it's a risk. What if the foreign currency, what if naira appreciates against the foreign currency? So it's a risk. So, but whether a risk or not, it gives room for speculative activities. So apart from production activity, we have the speculative activities, which is putting pressure on the naira. So if we have too much of speculation, if government gives room for too much speculation, it becomes a little difficult to control that, because speculation is a fragment of individual thoughts. So if I sat down in my room and I think that if I can practice that borrowing and repayment strategy, I think I'm affecting the economy in my own small way. So what if my school of thought has a good proportion on the populace? Don't you think that we will have very large impact on the economy? So speculative tendency is not really good for the economy, and that is what this is creating. Apart from that, what it should have done is not what it's doing, because nobody is forcing anybody to do something. Do is to send people back to their own country to go and consume what they have. But instead of that, it's not sending us back as a citizen to go and consume what we have. Rather than that, we still insist on importing, or nothing happens. That is why you see manufacturers association telling us that they are going to down tool, or they are going to close shops because the foreign exchange is not smiling. Who told you that what we are looking forward to in the international markets cannot be produced in Nigeria? We have a lot of things that can be produced in Nigeria if we can put our feet down. All we need to do is to extend the value chain rather than taking the shortcut of importing. Why not take the shortcut of production? Why not re-engineer whatever we are importing? Why not re-engineer it, break it down, find people to work on it? A whole vehicle is not produced in one country. How many components of this vehicle are we producing and exporting? So we need to look inwards. We have plastic in Nigeria. We have rubber. We have lithium.
You mentioned rubber. It reminds me that we have a lot of rubbish which can be turned into wealth.
Yes, that is recycling our products.
Not leverage on.
Yes. How many recycling points do we have? That's the question. We believe in buying the bottle, buying the pellets, blowing it, and then using it, rather than
dump it in the rubbish bin.
Dump it in the rubbish bin. The ones we dump into the rubbish bin is creating a kind of problem to Nigeria. It's creating erosion problem, which will erode our hard-earned currency during the rainy season. So we need to look inward, look at our production line, and increase the level of our production line. One thing manufacturers do complain about is the quality of human resources in Nigeria. If you're looking at the quality of human resources in Nigeria, why not bring people in from abroad, insist on them producing in Nigeria, like we did about our railway track laying. We insisted that they should transfer the knowledge to our locals. We just pray that the locals will not gain the knowledge and fly abroad and japa. So that's another point that's another point putting pressure on the foreign currency demands. If you are looking at japaing, who are you leaving behind to do the production? Where will you see the fund to travel abroad? Sure. You get the fund in Nigeria. Apart from that aspect, the speculative hands still tells us that a lot of people they are naira billionaires, but they look at being dollar millionaires. So how do they do it? They exchange this naira to foreign currency and maybe keep it. We have more dollar millionaires in Nigeria than what is reported on Forbes. So we may need to look inward and make sure that these people are forced to either produce or they are not encouraged to do capital flights. That means taking our funds abroad. If not, if you borrow in dollar, if you secure foreign debts, these foreign debts will still find its way back into international markets as soon as they get into Nigerian economy.
True. So now we're still talking about our dear naira. What is your analysis of the naira going above 1,000 naira to a single dollar? That had happened like 3 times, twice at the end of last year, that's in December, and then once in the new year. So what is your thought on that?
My thought on this is that there is an active policy from the government side, and there are active actions from the market side. Government is working hard to ensure that the exchange rate is kept at a controlled level, while the market is working hard to ensure that they make much profit from the system. It is normal. So it's the government that must win in this kind of struggle, because if government doesn't win, the larger Nigeria is in trouble. So we need to ensure that government wins. But unfortunately, government cannot only win through CBN intervention, through borrowing, and through maybe diaspora remittances alone. We need to look into our production. Like I told you, government told us that it has no business in business, and since then we've seen our dear naira going a little down. So if we need to control the naira, we need to look into the production line, and we cannot leave it into the forces of demand and supply to control. Even as good as the price regulation, I mean the export price regulation, is very, very, very necessary, because you can't produce grains in Maiduguri, you can't produce millet in Sokoto and expect the forces of demands and supply to eat up the profits on that. What that will do is that it will kill the morale of the farmers, because the bulk takers are the ones enjoying whatever the efforts of the farmers are. Why not produce, sell it to the government, let whoever want to take it in bulk, let them come to the government, let them come to the government to take it in bulk. In that manner, the prices will be regulated.
I like that explanation.
Yes, that can be done with other products too. We have the gas supplies. If we are flying the gas, why flying the gas? Why not channel it? Why not lay a pipe between South Africa and Nigeria, which they are currently thinking of? Why not lay a pipe underwater pipe between Nigeria and many West African countries in supply of gas, of the gas that we flare? So government has to think about having business in business before we can get out of this problem conveniently. If not, no single individual or few single individual has the capital to do what we are expecting to do to keep the dollar rate at a controlled level. We have the bourgeoisie, we have the capitalists who has the control of the economy, and they have the control of the economy to their own benefits. How are we regulating this? So government needs to come in and see itself as a big brother to the poor, because we have a large chunk of the poor in the country. If we have a large chunk of the poor in the government, should come in, serve as their capital provider, serve as their hands and legs, and work for them, rather than sharing money from what we borrow. We can share money from what we produce. If not, we'll be leaving our economy to the capitalists, to the bourgeoisie to control, and at that point they will control it to the favor of their profitability. This is what we may not want in Nigeria.
Mr. Joshua, we'll still talk about production. Viewers, you're still on to Politics and Business TV. This is Business Focus. We'll go on a short break. We'll be right back. Do stay tuned. Welcome back from that break. Mr. Joshua was walking us through how the government should be a big brother to the producers. Mr. Joshua, I have another question on production. For the fact that you mentioned multiple times that Nigeria needs to be producing more, And for the Manufacturers Association, the Lagos Chamber of Commerce and Small Scale Industrialists, for them, they are downscaling. That means they are reducing workers. So how does that come in? Because we need to produce more, and then those people, that's the manpower for production, are being sent home because of the fluctuation of the currency. What do you make of that?
Government intervention.
Still, the government should be the big brother?
Still, the government intervention.
Okay.
When we were to experience this global recession, global world recession, the U.S. government intervened in making sure that most of his companies, most of his production outfits did not go under. So it intervened when it realized, the nation intervened when it realized that many companies are shutting down. So if many companies will be shutting down in Nigeria, we will need government intervention in ensuring that the companies can sustain themselves within that within that period, and gain whatever they think they can gain for a relaunch of their business economy, so of their micro business economy. So if they can relaunch their micro business economy, it will be good and fine for them. But government needs to intervene, because the effect of any company running down means that there will be loss of taxation, loss of government revenue through taxation, sure. loss of labor. They will lose staff into labor market. They will have to give up much staff into labor market, and the export process that we are expecting, the export driven process that we're expecting to pick up, may not pick up. And the more the companies, the large companies that we're expecting to bring foreign direct investment into Nigeria, the more they realize that it's not easy doing business in Nigeria, whether due to the fact that multinationals are closing down, or whether due to the fact that the local companies are shutting down, it becomes a challenge to them in coming to Nigeria. It would discourage foreign direct investment or foreign portfolio investment.
So Mr. Joshua, the NNPC got a loan, a loan to liquidate, to get more money into the country, but that did not really help. Can you say that was a lost cause?
Well, when we're talking about loan into the country, if we don't do our returns on investment, calculation of returns on investment very well, we end up getting ourselves into this point. If we take loans to distribute to through the social investment program, if we take loans through to distribute to agencies without proper monitoring or without proper guidance on how to spend the loan or on how to recoup or to repay the loans from what the purpose it was borrowed for to serve, it becomes a difficult one, because as the loan is coming into the country, it's being ferried back to various countries as personal gains and savings. Instead of serving the nation, it becomes serving the individual. So it's difficult for us to measure to measure the importance of these loans, importance of what is coming into the Nigerian economy. And it's not only this intervention. When we throw one intervention at the depreciation of naira, it will have its own impact. But when we think about the collective impact of what depreciates the naira, the intervention of the CBN may just be a little fraction in relative to what the causes factor will be. If the causing factor is, let's say, 50%, is moving towards depreciating naira by 50%, and CBN's intervention keeps it from depreciating from let's say 35%, the differential will always be there. That's the 15% differentials, which is expected to be covered up by many other factors, will always be there. So CBN intervention is successful, but it's not a one shop stock. You cannot get everything from the CBN intervention. You can only get a fraction of what you want to cover up from CBN intervention. So it's really good, but not enough.
You know, the Minister of Finance actually also got 2.25 billion. That's also to stabilize the foreign exchange market.
Yes, everybody keeps getting grants and loan. What happens to the production line itself? We have the demand and the supply. The demand in one hand is insatiable. The supply at the other hand is limited. So how do we cover up for our demands? If we are to cover up for our demands, we need either to check our demand or increase our supplies. So checking our demands is very, very important this time around. We have the individual demand, we have the national demand, and we have the corporate demands. What the Manufacturers Association are looking at, it's the corporate demand. What their demand is struggling with the national demand, which is the need to sustain the foreign exchange, and the need to have more savings outside more dollarized savings outside the country. So we may need to reduce the competition against what the manufacturing sector, what the corporate sector needs, to ensure that we can keep our naira strengthening. So that means that as a nation, we need something to hold the naira down. As an individual, we need something to hold the naira, to strengthen the naira. So if we are going to look at that, we need to check the health of the government. We need to check the individual habits in order to keep our demands down, rather than letting the demand outweigh the supply. Sure. The CBN and the ministry they kept on supplying, but is the supply enough to cover up the demands? The demand is so high that we need much more to cover it up. Instead of that, we should look into production and keeping our demands at a satiable level.
Okay. Mr. Joshua, with the fluctuations we're having in the naira, what exactly is your thought on our economy? Because the naira goes up, it goes down, it's very regular, it just fluctuates. So what does that say about our economy? And this is a new year.
Well, the forex rate is a measure of the performance of economy itself, because it's a kind of measure between the balance of trade, what you sell and what you buy from the international market. So itself is a measure of the economy. So the higher the lower the strength of the naira is, the poorer the nation is. So apart from that, the effect of the forex, the weakness in naira will have effect on one, in inflation. Like we can see, inflation is really going towards 30%, and as estimated, we may likely hit the 30% before the end of December 2023. So what the impact is: increased inflation, reduced purchasing power, because we depend on importation. So purchasing power, we need to earn more naira to buy whatever we need to buy. Even if the price is kept at a normal price, it's kept constant at the international market. That is, if you are buying $10,000 worth of goods, it's $10,000. The fact that the naira is weakening means that you have to use more naira to buy that product. So its effect in the country is very, very bad. Apart from that, we may likely see the influx of fake products, because if you cannot get something, if you are looking at a cheaper product, like say you are going to buy at $10,000 and you cannot afford that in naira equivalent, you may be looking for a way out, and somebody offering you another alternative may be offering you a counterfeit product. So Nigeria is likely exposed to counterfeit product. So we may want to call on the Standard Organization of Nigeria, the Nigeria Custom, to be on on alert. Then the NAFDAC and the likes to be on alert.
So we're not just losing jobs, we're looking at the possibility of a lot of fake products.
Yes, yes, because when products are costlier, it exposes the country to a kind of fake products, to a kind of fake to fake products by importers and by many other means. So then we look at inflation, we look at job loss, we look at purchasing power. Those are the effects on the country, the direct effects on the Nigerian nation itself.
Okay, now we're going to move forward to solutions. What is ultimately needed to stabilize our foreign currency?
Like I told you the other time, supplies and demand has a lot to do with foreign currency. Supplies and demands of foreign currency as a way of stabilizing it. So we look at production, supply chain, we look at the production, we look at the grants, and we look at the loan. Then we look at the CBN intervention. CBN intervention is coming, but if CBN intervention is coming, we should be looking at either it's coming as a loan, or it's coming as a grant, or it's coming as a bilateral agreement, or production sales agreement between Nigeria and many other countries. So that's on the supply side. Alternative product in Nigeria, you should be able to pay more rather than paying the same amount.
That's something that's already produced.
Yes, already produced in Nigeria. Then we should be looking at looking at our demand, those products that are putting much demand on foreign exchange. If you are looking at those products putting demands on foreign exchange, we will be able to address those products, address them in the sense that we will be able to encourage people to produce much on it. We've done it on rice production, and rice production, from the fillers we're getting, we are exporting more than we are consuming in Nigeria as of today. So we are doing that. We are currently doing that on petroleum products, that is on diesel, on PMS. We are likely going to be a supplier nation before the end of the year rather than a consumer nation. So we should look at many other things like software costs, like subscription costs, like education costs, and like even the cost of living. Because if we can improve our security and we can improve our social security in terms of pension and the likes, we will be able to get citizens who believes in Nigeria and want to stay in Nigeria rather than packing the naira, exchanging it for foreign currency, and flying abroad.
So now let's talk some more about the CBN intervention. Previously, we have seen CBN interventions. What exactly should we expect of this one?
Well, the CBN intervention is that's one of those points in making sure that naira is strengthened. So the Central Bank of Nigeria has done what it ought to have done. We'll be looking at maybe CBN getting dollars, CBN getting foreign from the NNPCL, and from other big players in the economy, like the LNNG, like the refineries in the coming years or months. So we should be looking at influx of foreign currency from these big companies, and making sure that they are being distributed accordingly. So that's the first thing. The second thing is that when foreign exchange depends on provision of infrastructure, we should be looking at making sure that the infrastructure that are well produced, they are well guided to fruition. They achieve what they are directed to achieve. Let's say production of road. We know that getting loans in respect of production, laying of roads or tarring of roads, means that we are looking at the returns on that investment. That means we are opening up a community to export their product or to supply their products. What the returns on it is expected to generate can be used in sustaining the foreign currency naira, and making sure that we don't depend on importation. So the CBN has done what it ought to do, but aside from doing what it ought to do, CBN needs to monitor the application of this fund, because it's of no use getting a fund and not monitoring the application of the fund. It gives it a free-for-all impression that the money is for the country and not for anybody.
Okay, so now, Mr. Joshua, lastly, what is your projection of the naira based on our current situation and the reality on ground?
Well, between now and June, I'm expecting that CBN has a whole lot of work to do in sustaining the naira, in strengthening the naira, so that it won't fall freely against other currency. CBN has a lot to do, and other fiscal and monetary measures has a lot to do in keeping the naira strengthening. Aside from that, between July and December, we should be looking at the effect of the bogus ministry that we have, because we are looking at mentors performing their duties. If they can perform their duties, we have the blue economy, which is a new field in our national ministerial journey. We have a lot of other ministries that we believe that they are going to add figures. They are going to strengthen their productivities and what they are meant to do. So apart from that, we are looking at Dangote refinery. We are looking at many other companies coming on board. We are looking at many other modular refineries coming on board, and we are looking at a reduced dependency on imported grains. So based on that, between July and December, we should be looking at a controlled, a strengthened naira. So, but between January and June, the government has,
where the fight is.
Yes,
that's where the fight is toughest.
Yes.
Okay, thank you for that insight, Mr. Joshua. Thank you for coming in.
Yeah, welcome.
Viewers, you're still on Business Focus. This is Politics and Business TV. We just dissected our foreign exchange rate and its impact on the economy with a taxation and accounting fellow, Mr. Wale Joshua. On behalf of the production crew, I am Maria Adu-Zakari saying have a good day.